பேக்ரவுண்ட்
இல்ல நான் இப்ப வெளியே போயிருவேன். ரெண்டுமே அபிஷேக் ராமநாதன் இருக்கா?
Hello all. Thanks for the patience. Apologies for the delay actually. There has been some technical glitch actually. So we can start the webinar. Thanks for joining the session. So today's topic is about driving business success using tools like FP&A, Scorecard, and MIS dashboarding. So that is the topic. Without further ado, we'll dive into the session. So let's not get into technicality. So what I will do, I will just give a small example. We'll start with an example, and then from there we'll take on. Say, for example, let's consider a small scale vegetable vendor. Okay, it's a humble shop outside an apartment complex. Uh, this vendor was making approximately 25,000 per week, actually, with a margin of say around only 10%. His business was modest but stable. But one fine day, the apartment owner association asked him to move his shop inside an apartment building for the sake of more convenience, because the major customers are being apartment members. So the shop has been moved inside the apartment building. At first glance, this seemed like a setback actually. His space would be smaller and he would lose some customers, which are outside the apartment, obviously. But he adapted. He reduced his operating days from just 6 days, from 6 days to 4 days actually. For the remaining 2 days, he started offering door deliveries to the apartment builders. But here's where he made an intuitive financial move that shows the importance of financial planning and analysis, even in a small business. By collecting advance payments from customers the day before delivery, he could use the customer's money to purchase the items he needed without incurring any interest cost or storage cost. This allowed him to free up cash flow, essentially using his working capital more efficiently, which are more appealing to the apartment owners association. Without having to worry about upfront inventory cost, he could increase his margin. Additionally, he started selling fruits with high margins that catered specifically to the apartment owners. Therefore, thus it increases the revenue and the profitability for his shop. As a result of these small adjustments, within a few months, his revenue grew from 25K per week to 50K per week, and his margin increased from 10% to 12% in the revenue. Now you might wonder, how does this relate to FP&A, scorecards, and MIS report tools that are mentioned in the topic? The answer is simple. Just like the vendor, the business needs plan and adapt to their changing environments. While these financial adjustments were intuitive for the small vendor, for larger businesses, they have to carefully plan and forecast moves to ensure that the impact changes are sustainable and profitable. For a large-scale business, the effect of such decisions can be magnified. Both rewards and risks are greater in a large-scale business. This is where structured tools like financial planning analysis, scorecard, and MS reporting come into play, helping business track their performance, manage cash flow, and assess strategic decisions. This session is more focused for uninitiated and businesses which are just placed from the cliff, where the tools that are used are traditional accounting aspects which are tracked for performance, which are just moving towards FP&A and tools like Scorecard and MS reporting. So imagine you're flying in a plane, and a couple of hours into the flight, Imagine you're flying in a plane, and a couple of hours into the flight, you hear an announcement from the captain, and he goes, "Ladies and gentlemen, we have encountered a small issue with the navigation system." It goes, "Ladies and gentlemen, we have encountered a small issue with the navigation system, but don't worry, the engine is working perfectly and we are cruising smoothly." Now, what would your reaction be? Would you be comfortable hearing what the captain has announced? That the navigation system is faulty, and but the engine is fine. It's flying in the right attitude. The direction and the navigation is faulty actually. It's kind of a little unsettling, isn't it? You probably want to know where the plane is going, where it is going to land actually. So, even in a business, financial planning and analysis, scorecards, and MS reporting are exactly the navigation system for a business. They ensure that the business is heading in the right direction, it makes progress, and that you are staying on course. These tools help managers, leaders measure performance, identify risks, and adjust strategies proactively. Without these tools, businesses are flying blind actually, not knowing where they are headed or if they have even tracked to reach their goals. Previously. Yeah. So the key terms I used are financial planning and analysis, management information system, and scorecards. So these are the tools that we'll be seeing about in the going forward session. So I just want to explain all these three terms in brief. Let's take financial planning and analysis. It is a tool that involves budgeting, forecasting, and analyzing a company's financial performance to guide a strategic decision making. And as far as the management information system goes, MIS focus only on collecting and processing information that are valuable to the middle level and top level management. That would be both financial and operational. And scorecards specifically are the tools that are metrics that are help to measure the key performance areas. Say operational, say for each department specific metrics can be analyzed in scorecards. So yeah, please go. Hello. Okay, maybe I can here. There's someone speaking. Who's this? Okay. There are any questions? I'll take a pause here.
Abhishek, please mute other participant. Whenever required, they can unmute and ask the question.
Okay, all right. Thanks, Aman. So I'll take pause every now and then and ask for questions. If any, you can unmute and ask the question. So I'm moving forward. Let's talk about FP&A. FP&A stands for Financial Planning and Analysis. As I said, it involves budgeting, forecasting, and aligning financial goals so that we can forecast a revenue and margin and business performance for business and strive to achieve the same. Take the example of the vegetable vendor itself. The decision was intuitive for the vegetable vendor, but say for a large-scale business, we need FP&A. And FP&A supports and aligns financial goals with strategy objectives. For example, the vegetable vendor might decide to open 5 new stores. And FP&A would be assess how much capital is needed, how much revenue can be expected, and how best the funds can be allocated. And say for budgeting, in vendor's case, that is the vegetable vendor's case, if you were to expand, budgeting would be helping him to allocate resources efficiently to ensure that each shop can be operated at a profit. For example, he might need a budget for inventory, marketing, and logistics and stuff. And as regards to forecasting, just like how the vendor had higher demand for higher margins, business use forecasting to predict future financial outcomes based on current data. For large businesses, financial planning and analysis forecast future cash flows, helps manage debt, and ensures that the business is prepared for downturns and challenges. Apart from forecasting and budgeting, the FP&A involves scenario analysis as well. For large-scale businesses, external market forces, economic downturns, supply chain disruptions can significantly impact their financial performance. Scenario analysis helps business predict the effect of various situations and prepares them to pivot when necessary. For example, a business might assess the impact of increased raw material cost or fluctuating customer demand. So as I said, when the vegetable vendor makes intuitive changes in his budgeting and forecasting, meaning the decisions he has taken, strategic decisions he has taken are intuitive. But for the large scale businesses, these scenario analysis, what if analysis, and forecast are essential to predict. And so let's move into scorecard. So scorecards are the tools that helps ensure performance and track whether the business is hitting the strategic targets. Think back to the vendor that example of a vegetable vendor. After expanding, he might want to measure his success not just by revenue, but by other factors like customer satisfaction, product variety, delivery efficiency. Scorecard will allow him to do that actually. In large scale businesses, scorecards are essential for tracking a wide variety of KPIs. The vendors that can be tracked are that can be classified as financial metrics, customer metrics, and internal processes. Say, as far as the financial metrics goes, revenue, margins, and cost management would be a key factor. And for customer metrics, customer retention rates, satisfaction scores, the effectiveness of promotional offers. Say, any offers that has been given, those can be considered as a key metrics. And these may be operational metrics, but even those are considered as key metric areas. And as far as the internal process goes, delivery times, inventory turnover, and order fulfillment efficiency can be considered as a key metric areas. The balance scorecard should be customized in such a way that this address all the financial, customer, and internal process aspects of the business. And as far as the financial goes, we should ensure that the revenue and profit goals are met. The metrics, the key metric areas that are being fixed should ensure that the revenue and profit goals for the financial year are met. And as far as the customer metrics goes, we should ensure that the customer has been satisfied. Say that the metrics should be in such a way that we should measure whether there are repeat customers and the repeat customers are increasing, and how satisfied the customers will be. We can achieve this by, say, customer feedback form. The data can be collected by a customer feedback form. In a larger business, a scorecard not only tracks the overall performance, but also helps and identifies gaps and areas for improvement. Without this, the business could miss critical issues in their operations, just as the vendor could miss out opportunities if he didn't track customer preferences or optimize delivery times. Let's say you're running a race. You have your goals, you have your timeline, and your path ahead. But imagine if you had no timer, no finish line. You wouldn't know if you're doing well or if you need to speed up. It would be more difficult to assess whether you're on track to meet your goals. Scorecards are the timer, the finish line, and the cheerleaders for your business. They track your performance against your goals and ensure that you're on the right path. Just as a racer time, how much time it is taking to complete the race and the progress to finish the line, a scorecard provides a clear visibility into how well you're doing in key business areas. And let's move on to the MIS reporting and decision making. And the example you have taken, the vegetable vendor, let's discuss from that. Say for MIS report relates to the vegetable vendor, it can provide insights to the vegetable vendor for items like which are selling best for him and the customers that are making frequent orders. The real-time data would allow him to make more informed decisions about stock management, pricing, and promotions. In large-scale businesses, MIS reporting provides a real-time data across multiple departments, ensuring that the business leaders make data-driven decisions. For example, a sales manager in a retail chain might use an MIS dashboard to track daily sales, inventory levels, and store performance. It provides a real-time visibility. In large businesses, MIS allows you to integrate financial data, operational data, and customer data into one comprehensive system. By doing so, companies can spot trends, identify issues, and make informed decisions. For example, a company could track if sales are higher in one region compared to another, and identify issues like inventory shortages, production delays, or customer complaints before they escalate. They can make informed decisions by having an up-to-date data. Business can decide on things like staffing levels, reordering level, and launching new market products. In case of a vendor, the MIS report would allow him to track everything from sales performance to delivery efficiency, helping him to fine-tune his operations and to maximize his profitability. And let's discuss about use case scenarios for scorecard, financial planning and analysis tool, and MIS dashboarding. Say in a manufacturing concern, a large-scale manufacturer trying to forecast cost of raw material using FP&A tools, they can project future cost based on the current market trends and plan accordingly. And MIS reporting helps track real-time production data, inventory levels, and delivery times, ensuring that the operations are running smoothly. Scorecards track KPIs like overall equipment efficiency to ensure that the machinery's uptime is maximized. In service industries, the customer satisfaction is the key. For example, hotel chain can use scorecards to track guest satisfaction, employee performance, and revenue growth. MIS reporting can give them a real-time insights into bookings, cancellations, and room occupancy rates, helping them optimize their pricing strategy. As far as the trading concern goes, FP&A helps forecast their demand and manage cash flows. MIS reports provide visibility into sales performance, inventory turnover, and receivables, ensuring the liquidity and operational efficiency. Scorecards can track the daily sales outstanding, ensuring that the payments are collected on time. And we can take some live use cases for scorecards and MIS reporting. Say, for example, Ayurvedic pharma company operates clinics prescribing medicines fulfilled via centralized distribution center. The company is stuck at a turnover of rupees 30 crore, focuses on streamlining the process and controls before scaling any further. And they want to focus on the purchase and the production process for the reason that before any growth that is foreseeable in the future, they want to set the process and controls streamlined. And we can see what are the metrics that needs to be addressed in this case in scorecard and MIS reporting. Say we can take the metric as the percentage of purchase orders delivered on time to the business so that they can do the manufacturing efficiently. This ensures that the timely availability of raw materials to avoid any production delay. This is one key metric. And the other metric would be supplies lead time versus target lead time actually. This measures the supplies reliability and help manage procurement schedules, controls procurements, the procurement cost and the budget overruns are efficiently overlooked by this supply lead time and target lead time key metric area. And one of the key metric area would be inventory turnover ratio. This indicates the efficiency of inventory usage and reduces the storage and interest cost. And they can measure the stock out frequency and their duration. It helps them identify the supply chain gaps that can halt the production and impact sales. They can also measure the manufacturing yield, actual output versus planned output. That is, the manufacturing yield would be calculated as actual output versus planned output. This evaluates the production effectiveness and reduces the scrap and the rework that need to be done on the FG. The production cost variance. This production cost variances controls manufacturing expenses to maintain the profitability. Say these are the key metric areas that the company needs to address so that they can bring their processes and controls streamlined so that they can ensure that the growth is stable and streamlined. Let's take another use case. Say a company which is into edible oil manufacturing sells products through multiple e-commerce platforms, and they have a centralized warehouse. So, they have faced issue of profit erosion because the direct cost, especially the commissions and fees charged in e-commerce platforms, are higher than anticipated, or rather, I would say, the costs are not being tracked properly by the business that lead to profit erosion. These costs have been overlooked due to inadequate reconciliation between the periodic settlement statements that has been provided by the e-commerce platform. This oversight is impacting overall profitability and calls for a detailed review of cost structures, sales cycles, and product movement across channels to optimize the e-commerce strategy. So let's see what are the metrics that can be addressed by the business to ensure that these problems can be addressed. Say one of the metric can be the order cycle time per platform actually. This would help to assess the fulfillment speed and the customer experiences in each e-commerce platform. This ties back to the business because this is on the other side. Say, so the ultimate key for this metrics are to identify which e-commerce platform should the business should prefer, and the order cycle time per platform would help them do that actually. And the other metric area would be the product movement velocity. Say, in each platform, how much each product is, whether it's a fast moving or slow moving product in each e-commerce platform. Say one product can be fast moving in one e-commerce platform, but the same can be a slow moving product in another e-commerce platform. So this key metric area, that is the product movement velocity, would help them place their product in each e-commerce platform in such a way that the profits are maximized. And the other key metric area would be order fulfillment status and delays. And the key metric areas that I've mentioned are part of the scorecard metrics. And the last one, the order fulfillment status and delays. This would help them monitor operational bottlenecks and that are affecting the delivery times actually. Once we ensure that the delivery times are the most efficient, the cash flow cycle, the cash conversion cycle would be more effective. Thus, it will reduce the cash flow crunch for the company. And tools like MIS report can come into play. Say, for example, the cost per order for a e-commerce platform and platform profitability can be assessed by an MIS report, which can be presented to top level or middle level management so that the informed decisions can be taken by the management. So I'll take a pause here. I'll just take a few minutes for questions. Do you have any questions? If any, maybe you can unmute yourself and ask questions here. Maybe you can raise your hand so that the host can unmute yourself.
Abhishek.
Yes, sir.
One second. Am I audible, Abhishek?
Yes, you're audible.
Actually, we have a case, like we have one of the client, they are facing a huge accumulation due to trade receivable. Like their credit facility is 45 days, but normally they find it difficult to realize the amount within 45 days.
Okay.
So how can we use this like MIS or scorecard to make it better realization of the data specifically?
Okay. It's a good
Or
question.
how can we track them? Most of the clients are facing this issue, specifically in transport sector and in construction of road and bridges.
Okay. Okay. It's a very good question. So we have to address both sides of the lag in realization of the receipts actually. Say, for example, we have to address what which customers. Say there are multiple customers, and we have to address which customers, the MIS report would be a more appropriate tool here actually. We have to say which customers lacks in payment, or say they don't adhere to the credit period and they are delaying in payment. This will be addressed via MIS report. Say there are multiple, say there are n number of customers, say there are 50 to 60 customers. So MIS dashboard would be a proper tool here. And customer wise, the credit period and time taken to realization for the receivable receipts would be a more appropriate tool here to address this issue. This is on one side of the the issue that you have mentioned, and the other side would be we have to ensure a scorecard would be more appropriate on the other side. Say there is a accounts receivable team, so we can measure the performance of the accounts receivable team with particular scorecards. Like if you have any particular follow-up visits with the client, each client they have to follow up and give calls to make the proceeds realized, so that we can ensure that how many calls has been done by a particular accounts receivable department. So a scorecard would be another the efforts that need to be taken from our side. So that can be measured via scorecard. Hope I kind of answered your question. The MIS would be the more appropriate tool, but scorecard would be the scorecard is more to set key metric performance metrics for our internal departments. It can be for accounts receivable, it can be for accounts payable, it can be for warehouse and inventories. So scorecard is a department-wise metrics that are set, and MIS dashboard is more overall a top-level and middle-level management information system with which we can make decisions.
So in case of scorecard, so what will be the criteria? Like we have multiple things to do to increase the sale, to make the realization better, or to
so how does this work actually?
Period.
How do they go about making the realization of the receivable proceeds?
Normally, their accounts team is following only based of the closing balance.
Okay, I would suggest what are the projects? I would say what are the projects that are that are in pipeline for each customers, and in which stage we are that would come under MS dashboarding. Sorry, so that would come under MS dashboarding. The scorecard would be more a metric that is used to metric that is used to analyze the performance of each department. So that is the ultimate objective of the scorecard. So I'm not sure whether maybe I can check and revert for accounts receivable. What would be the specific scorecard metrics that can be placed? Maybe I can check and revert on this.
Sure, we can work on actual data. I think so. That will be a better method to work on based on the information available. Okay, definitely. Thank you. Thank you very much.
So, thanks so much for the question. And any other specific questions? Can you please say so? Maybe we can unmute yourself. Okay, I'll take it as a no. I'll just make a quick summary of what we've discussed so far. So we have discussed three major tools that are used, that should be used to drive business successes. So that we have a visibility of the business performances. Those would be, one is the MIS reporting, the other is financial planning analysis, and the third one is scorecard. The financial planning analysis is more like a long-term vision of how the business should go forward. And MIS dashboards are the information systems that are used, on say it will be updated on a regular basis, say a week, a month, or a quarterly. So those are information systems that are providing information to the management so that they can take informed decisions, so that they can move forward to the goals that have been set by the FP&A team. That is why that is the ultimate objective of the MIS. And the scorecards. Scorecards are more granular. They are set each department wise. It's not set on a broad level. It is department specific, very specific to each department, that how we can measure the performance of, say, accounts receivable team. Just what Ramanujan asked, accounts receivable team or accounts payable team. So there are metrics that can be formulated to ensure the performance of each department. So that is the ultimate objective of scorecard. So this is how it integrates. So the scorecard would be set at the lower level or department, say rather say a department level, and the MIS information would be it's a cross-sectional data. MIS is a cross-sectional data that would be like useful for various departments, say purchase, sales, warehouse. It would be useful for various departments, but it would be on a broader level. The scorecard is measurement of metrics actually, and the MS that is the MS reporting is information system that is used to take decisions on various departments and various level of management. And the FP&A is more broader, and it would include the budgeting, forecasting, and what if scenario based there will be various scenarios that will be considered, and the projections will be made accordingly. So it is like more like a long-term vision for a business. So this is a quick summary of the tools that we have discussed so far. And I would take any other questions, if any, and we can quickly conclude after a Q&A session. So I have a few questions that I need to check with yourself so that I can answer myself the answer for the questions. So this is what the conclusion we just explained. So if any questions, please let know and we can answer, if any. So I will go to the Q&A session. So I have a few questions that needs to be answered actually. So that will bring more clarity to the session that we have discussed so far. Say, let's say you have a question that how can a business know which KPI to track and which scorecard and which metric to be implemented? So that would depend based on the business to business, and what are the gaps and the process, the control and process gaps that are there in the business. Say, for example, a business might have purchase or procurement department have a major gap, and they need to address those areas so that business can be streamlined. For those businesses, we have to address metrics for a department, say the purchase, purchase and procurement. They might be having a strong sales department, so they need not be they may be sufficient. They will be sufficient with the MS report. They may need not say granular level scorecard metric. They may feel that it is redundant to go for a granular level scorecard reporting, a scorecard metric. They would be sufficient with the MS reporting itself, because the sales department, they are satisfied with the performance of the sales department, but they are not satisfied with the purchase department. So it is it depends on the case-to-case basis. We have to identify which department lacks, which business lacks on which department, so that the scorecard and MS reporting can be designed and customized appropriately. So that is one question I needed to answer. And the other one would be how to integrate the FP&A scorecard and MS reporting. That I kind of answered earlier itself. Say, being the scorecard, it's a granular level, and the MS is the information system that is used by middle level and top level management. It's the information system that gives cross-sectional information across all departments. So it is on a middle level. Say, it measures the performance of the business. So we are going bottom up actually. So scorecard would be at the bottom, and that is not bottom as in it's more granular, and the MS would be in the middle, and the FP&A, that is the financial planning and analysis, say the forecasting and budgeting, all those would be at the top level. Say it's like all the informations that are captured at the bottom level and the middle level are used to do the forecasting and budgeting. So this is how all these three tools are integrated. So as I said in the starting of the session, say that you're flying in a plane. Okay. So without the direction of the plane, without knowing the direction of the navigation of the plane, you won't reach the destination, right? But you may be flying fine. You may be thinking that you're flying fine actually, but without the navigation or without the direction, we need not know. We don't know actually that which whether we are heading in the right direction. We may be having that we may be having thoughts that where we have to go, but we don't know. Without the navigation system, we will be blind actually. We'll be flying blind actually. And the scorecard and MS reports are like directions to the pit stops. We won't be directly landing to the destination. We would be like we'll be taking pit stops, right? So in each there may be multiple pit stops before arriving at the final destination. So the scorecards and the MS reports act as a navigation system for the pit stops, and the FP&A would be the ultimate direction. Sorry, so there are some technical glitch. So as I was saying, we need various pit stops before reaching at the final destination. So the FP&A acts as a navigation system for final destination, but the scorecard and the MS reports are used as the direction and navigation system for the pit stops. So using these three tools effectively, we'll be reaching the destination that we have in mind. By this, I conclude the session saying that if you are using these tools effectively and efficiently, we would drive the business in a right direction, and we will be achieving the success we have in mind. Thank you, guys. So I'll take a pause here and any feedbacks or any questions?
Thank you, Abhishek, for such a wonderful
Thank you.
session. Could you please share this PPT also in the group? So
We can do the
actually,
session.
it will be very useful for us if we'll have a further discussion.